And shifting focus to M&A Street then, in one of the largest private equity deals in India, Blackstone will buy a 60.5% stake in technology services provider Mphasis. Now, Blackstone will buy the shares from HP at 430 rupees per share. This will be followed by a mandatory open offer for 26% more shares of Mphasis. Now, for more on the deal structure and the rationale behind this, let's chat with Pranay Jain. He joins us now with more details on the deal. Pranay?
Well, this long-awaited and much-reported deal has finally come through. So, world's largest private equity firm, Blackstone, has clinched the deal to buy Hewlett-Packard's entire 60.5% stake in Mphasis at a price of 430 rupees per share. This is nearly at an 8% discount to Friday's closing price. And naturally, this will trigger a mandatory open offer for additional 26% stake, which will be made at a price of 457.4. That's nearly at a 2.5% discount to Friday's price. So once this transaction concludes sometime in the second half of this year, they will have a majority stake, which would be bought for about $1.1 billion, in line with what we were hearing in all the reports. As you were alluding to, the interaction that we had with the senior managing director and co-head of private equity of Blackstone in India, he said the two biggest positives out of this deal is the fact that they've managed to secure a minimum revenue guarantee from HP for about $990 million, which is just shy of the $1 billion mark over the next 5 years. And also it can be stretched over 11 years, where they have 3 automatic renewals, twice that can be done. So this will give them some stability and predictability in earnings. Also, since they've managed to back the current management of Mphasis, they believe that this will not only help in executing their overall strategic roadmap, though they did not share any numbers with regards to a revenue or a profit milestone or an aspirational margin target, but this perhaps is believed to be better, where minority investors would prefer it to be under an aggressive private equity firm, as we saw with Bearing Private Asia in Hexaware. And there's hope that the company will be able to grow its HP business and, more importantly, the direct channel much ahead of industry estimates.
Okay, Pranay, many thanks for those details. Meanwhile, speaking with ET Now, Amit Dixit, Senior MD at Blackstone, said that the integration will go a long way in stabilizing the company going forward.
Our view that this agreement will be delivered and is going to be an anchor point to stabilize the company going forward. And the second point is, Blackstone is the world's largest alternative asset manager with $330 billion of assets under management. If you were to aggregate Blackstone like the way GE does, it will be a Fortune 13 enterprise. So we have an ability, we are a customer ourselves, to bring business to Mphasis, which other market players may not have that ability.
This can do wonders to overall Mphasis, because a declining business, if it stabilizes or if it starts growing, it can have a huge impact on overall company growth. So that is on HP business, if I may. If you look at our track record of what we have achieved in direct core, where we have grown faster than the market, we have become specialized around digital, GRC, new generation services. We have that swagger, we have that confidence that we can go and get to significant part of the $1 billion. Obviously, work to be done. So we are excited about that.
We have an ability, we are a customer ourselves, to bring business to Mphasis, which other market players may not have that ability. So we have an ability to bring that, so which allows us to have a higher conviction in making these IT services investments compared to other players.
And on to the biggest expose this year then, the Pandora's box from